Now looking at that G7 meeting or teleconference yesterday, we saw the market really gaining ahead of that conference call, but not a lot of stuff came out despite pleas from Spain. Spain really feeling that they're being shut out of the market.
Yes, indeed, that G7 teleconference was a bit of a non-event. We had expected going into the meeting that there could possibly be some support for the debt crisis in the Eurozone, but again, it was just a lot of talk and nothing really concrete came out of that meeting. And ahead of the announcement from the ECB today, there's still going to be quite a bit of uncertainty going ahead, and as we head closer to the June 17 elections in Greece. So really a non-event that has really kept the markets under a close watch.
Let's look at that ECB meeting. Some expecting the ECB to really hold back on cutting rates, but to somewhat give a direction on where rates could be going in the coming months. Your thoughts on what's likely to happen this afternoon?
Yes, we do believe that the ECB will possibly keep rates unchanged at this meeting. IMF Lagarde has indicated that there is a possible risk of a cut coming through from the ECB. We do believe that over the remainder of this year or towards the end of this year that the ECB could possibly cut rates by another 50 basis points, taking the refinance rate to about 0.5% by year end. But for the moment, given the current economic conditions and the fact that there is no solution, we still believe that the ECB will sit back at 1% at the announcement later today.
Let's say at the announcement the ECB decides to surprise the market and cut rates later on this afternoon. What impact would that have on the euro going forward?
Well, we do think that that's going to be, it will obviously send a signal that the that the Eurozone is still in a bit of a mess. We have seen that coming through over the past couple of months, and speculation really from the rest of the world, from a number of central banks, that we could possibly see rate cuts coming through from these central banks on the back of the fact that the economic downturn is starting to pick up pace. However, we did see earlier this morning that the Australian GDP numbers came out a lot better than expected, almost double expectation at 1.3%, and that really started to send a signal that there is some hope in the sunshine economy and that we could possibly see some recovery, and that really spurred risk on this morning.
Now looking at the rand at this stage, it's down amid at those 840 levels. It gained about 1% in early trade this morning. Talk us through the kind of movements we are seeing currently. What's really driving that strength in the rand at this stage?
Well, it's really been driven by what happened this morning with the better than expected GDP numbers. We saw the rand coming below the 840 level. It's currently at about 838, if I'm not mistaken. And if we do see it hover below the 839 level for quite some time, we could possibly see the rand move towards 820. But for today, we are expecting the rand to trade within a range of about 830 to 842. Yes, if we do see negative sentiment come through later today from that ECB meeting, we could see further pressure come in on the local currency.
Let's say positive sentiment comes out of the ECB. How much further can the rand run at this stage?
Well, given that we did see the rand go close to 870, we could possibly see, as I mentioned earlier, if we do hover below the 839 for a sustainable period, we could possibly see a move towards 820, and that's quite a sharp movement from the 870 that we saw going into the weekend.
We also have some data coming out of the South African economy tomorrow. We had manufacturing. I spoke to Nomvuyo about that a little earlier. Now, let's take a look at reserves. What type of numbers are you expecting to come out? We also have mining expected out tomorrow.
Well, with regards to reserves, we are expecting a lower reserves number on the back of the fact that we did see the rand weaken quite substantially in May, and that really gave the SAR very little room to accumulate FX reserves. We're also going to see a revaluation effect come through that could possibly pressure total gross reserves lower. But there's also the impact of what the gold price has done on total gold holdings. We saw the gold price fall by almost $100, and that really is going to impact on lower gold holdings. So in all, we could possibly see lower gross reserves and net reserves coming through for the May number.
And your thoughts on the mining numbers?
Well, we did see the mining number contract quite considerably in March. We saw a contraction of 9.8%. We're not expecting any improvement in that number for the April number. We're still expecting a contraction of 10%. And the prognosis for the remainder of this year is also likely to continue to be negative. We saw the mining sector subtract quite substantially from GDP in the first quarter of about 0.9 percentage points. And that's not really likely to turn anytime soon. We saw the Implats strike that we saw in the first quarter of this year. And with production only likely to resume later this month, mining production with gold production also going to expected to come off.